The AI gold rush created new millionaires and billionaires while making early investors of NVIDIA very, very wealthy. However, NVIDIA's stock price is down about 27.5% from its 52-week high of around $153 a share. This was thanks to the sudden appearance of the Chinese AI app DeepSeek, as well as US President Donald Trump's tariffs. But given all the hype, is now the right time to buy NVIDIA, or is it too late? Hi everyone, my name is Rick Orford, and I help investors like you make informed decisions with your money. And while I'm not a financial advisor, I have been trading stocks and options since 1999. If I've learned anything, it's that investing can be highly effective when you focus on quality companies, especially during pullbacks like what we're seeing right now. By the way, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insights and stock recommendations for investors of all skill sets and risk levels. And y'all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/RickO to get your 10 stock picks right now. Pretty much everybody knows about NVIDIA. The company operates 2 main segments: compute and networking and graphics. For the longest time, NVIDIA has been recognized for its powerful gaming GPUs, which has been the primary growth driver for the company until they started developing high-performance GPUs and AI factories that are now the foundation of today's AI development around the world. Almost every company developing AI that we know today, like OpenAI, Google, Microsoft, and many more, well, they're all using NVIDIA GPUs by the truckload, and they're all clustered together. And that alone turned NVIDIA from a gaming GPU company into the backbone of the entire AI space. NVIDIA's quarterly numbers prove the point. The company's gaming segment revenue declined 11% to $2.5 billion, while its data center segment nearly doubled to $35.6 billion. Also, NVIDIA's financials have been nothing short of extraordinary. The company's revenue increased 78% to $39 billion, while operating income increased 77% to $24 billion year over year. And to top it off, NVIDIA's net income also skyrocketed by 80% to over $22 billion for the same quarter. And that's only considering last year's growth. If we zoom out a little bit further, NVIDIA's 5-year revenue grew 682% to $130 billion, while net income shot up 1,582% to $72 billion. To put things into perspective, NVIDIA's growth rate in those metrics are significantly higher than the giants like Microsoft, Google, Amazon, or almost anyone else in the Magnificent Seven lineup. All thanks to, well, you guessed it, the advancement in AI. By the way, the data used in this analysis is powered by bar chart, which lets you screen and filter thousands of tickers by price, volume, sector, and more. So you can find data on pretty much any company in seconds. Go ahead and scan this QR code or click the link in the description to create your free account. Now, personally, what's most impressive to me is NVIDIA's ability to maintain its margins while scaling up so fast. I'm saying this because many tech companies experience struggles with profitability during phases of hypergrowth, but NVIDIA has managed pretty well. Even though I'm bullish on NVIDIA, the company is facing 2 potentially significant risks that are worth considering. Number 1, the AI competition is heating up. Companies like Google, Amazon, Meta, and many other hyperscalers are using NVIDIA GPUs to develop their own AI, but they're also working to develop their own AI chips to reduce the reliance on NVIDIA. Also, Huawei has created their own chip to compete with NVIDIA. Now, I could argue that these new chips won't even come close to NVIDIA's in terms of performance, at least not for a long while. But here's the thing, they may not need to. Hyperscalers just need to develop chips that can handle specific workloads, and if they can do it efficiently and for less money, then NVIDIA's revenue from these giants will likely be affected. The second risk is around geopolitical tensions, and is a pretty hot topic right now. A few years ago, U.S. export controls to China were tightened, and that restricted NVIDIA from selling their high-performance chips to the Chinese market. As a result, NVIDIA ended up developing China-specific products that had much lower performance and, of course, margins. And if the current administration implements tighter restrictions, NVIDIA could lose access to the Chinese market entirely. But the bigger elephant in the room is Trump's new policies, which are now causing a stir in the AI market and even in my Discord server. But here's the thing, the chips used to build NVIDIA GPUs are sourced from Taiwan semiconductor manufacturing. And guess what? Well, the Trump administration initially imposed a 32% tariff on imports from Taiwan, only to reverse it almost temporarily. So it's entirely possible that the cost for manufacturing NVIDIA GPUs will potentially increase as well. So those are the two major risks that could affect the company. But hey, as they say, there are two ends to every burrito, no matter how many times you cut one. And NVIDIA has some promising prospects as well. Let's go back to Trump's policies. Even if tariff exemptions on semiconductors aren't lifted for good, NVIDIA customers will probably take the hit quite easily. That's because NVIDIA's biggest clients are the hyperscalers and the companies that are all in on the AI race. Companies in the Magnificent Seven alone allocated hundreds of billions of dollars to ramp up their AI development. So I think these companies could likely absorb any increases in GPU manufacturing costs without any hesitation. I also don't think they'll quickly reduce the reliance on NVIDIA chips anytime soon. Probably there's no other company that can currently match NVIDIA's capabilities. Also, NVIDIA recently announced its next-generation AI computing platform, the Blackwell Ultra, and it's said to be 70 times more powerful than its predecessors. That doesn't sound like an upgrade, it's more like a change in how AI systems are going to be built moving forward. This new architecture will power NVIDIA's AI factories, which are data centers that many companies use to develop their AI models. So I don't think hyperscalers are going to be sleeping on this one. And more importantly, and also good news, NVIDIA is producing its AI supercomputers in the United States for the first time ever. They've commissioned over 1 million square feet of manufacturing space in Arizona and Texas, and the best part is that their Blackwell chips will be produced in Arizona by TSM, while its supercomputer manufacturing plants in Texas will ramp up in the next year. If this domestic manufacturing goes well, it'll certainly be a huge win and a growth runway for NVIDIA. Another catalyst to look out for is NVIDIA's Dynamo. This is an open source library designed to maximize AI usage across GPU clusters. It sounds a bit technical, but in a nutshell, it helps train AI more effectively. And this will become increasingly important as AI adoption increases. Dynamo is also embedded in NVIDIA's ecosystem, which means the more companies optimize AI workloads with Dynamo, the more they become reliant on NVIDIA's hardware. So, should you invest in NVIDIA? Well, here's my take. I think the recent pullback has created an entry point for long-term investors. I mean, if you're in for the long haul, like 5, 7, or 10 years, I think you'll come out very pleased. But if you're in for a short-term gain, I'd be looking at other names instead. In reality, I think we're just starting to scratch the surface of AI's potential. Eventually, AI, I think, will be incorporated into all our daily workflows, and NVIDIA is essentially selling shovels in this AI gold rush. So that's my take on NVIDIA, but what do you think of the company? Are you an investor? Let me know in the comments below, and if you found this analysis helpful, don't forget to hit that like and subscribe button if you haven't already done so for more investment analysis. Thank you so much for watching, and I'll see you in the next video.